You are listening to The Michael Lodge Show. Wealth, business, and taxes. Oh yeah, and some politics. Let's get started.
All alone again tonight, but you don't seem to forget about yourself. Wondering how it could go so wrong, but you didn't call for help. Let me tell you about the trees.
And good morning, this is Mike Lodge. I'm glad you've joined me. I am happy when Mondays come along. You know why? Because I look at my desk and I see how much work I need to get done, and I begin to focus. And that word focus is so important because for me, it takes coffee or tea or something to get me alive on Monday. But listen, everybody, I hope that you had a great weekend. I had a good weekend. Went down to a car club show in Cape Coral over on the west side of Florida. About a 2-hour drive from where I am at. Well, really, it's a 2.5-hour drive because you're out on the country road. Yeah, here in Florida, we do have country roads, but this is out on the country road. And you go through the farmland, and you go through the lakes and the little cities and the little towns. You get to see America, I tell you. When you go off these side roads, it really makes it look. So it takes longer to get to where I was going, but there were some beautiful cars there. We had Triumphs, we had Maseratis, we had Lamborghinis, we had Ferraris, we had all kinds of Mercedes-Benz, BMWs, because it was an international car show. Didn't see any American cars there because that's not the kind of show it was, but it was a nice show. Plus, the weather was perfect. I mean, I think it was like 72. Perfect weather to be outside. People were out walking. It was right beside the bay, or what we call the waterway. Beautiful, beautiful place. So, how many of you watched that interview last night with Prince Harry and his wife? I've got the feeling this is going to be a former wife. At some point in time, it's going to be a former wife because I'm telling you right now, you are never with a person that creates a divide between you and your family. That is the wrong person to be with. If they're doing that and there's a problem, it needs to be addressed. But you don't go on national or international television and spew out a bunch of caca that you cannot even verify. I don't know why Oprah Winfrey even did it. It was the worst television program I have ever seen. Of a one single lady, Harry's wife, Meghan, who just spilled her guts and even said some stuff that she should not have said because she talked about confidential conversations between Harry and his family. To me, that's a low belt. But anyway, you know what? It's a bunch of nonsense. What do we even care what happens to Harry and Meghan? Come on. If you want to leave from Princeton, if you don't want to be a prince anymore, start acting like an adult, both of you, because otherwise I don't even care what happens to you guys. You can go and live in Timbuktu and I would not care. But this morning I pull up Twitter and Facebook and everybody's talking about it, and everybody, I tell you, they're not saying nice things. And I'm not saying nice things either because it's a bunch of, well, caca. Okay, now I've got to talk about taxation here because I'm getting emails. I've gotten 2 in the last 2 weeks. And the question is this. If I don't have any self-employment income, can I still take my expenses against it? No, the answer is no. If you have no 1099 income, if you have no cash income that you have from a business, if you can't show that you're operating as a business and trying to create cash, trying to create money flowing into your business, you don't have anything to report. Nothing. So get off it. Just because you've taken losses in the past doesn't mean that you're going to be taking losses this year. Listen, the IRS is going to take a very close look at you. You have opened yourself up to audit if you're going to report no income and a whole bunch of expenses. They're going to take a look at you. You're going to say, what in the world is this guy doing? You're going to be put on a red flag. Schedule C's are red flags anyway, because they always like to look at Schedule C to make sure they're legit. And one of the legit questions that they're going to ask is, are you a hobby or are you a business? Do you have a business plan? Do you have company records that you keep? Do you have books that you keep? Do you have a focus in generating income? If you have none of those, I'm sorry, you're a hobby. And then all those expenses will be added right back into your income, and you will be taxable. And you may even face some penalties and interest because you reported a non-existent business. Listen, a business is when you are truly focused at creating a business. Now, I understand that a lot of you were under the COVID lockdown and you couldn't do that. But that means that you didn't have a business that year. That means you had no income coming in, so you had no expenses against it. Because you still had W-2 income, so you were still working, and you made very good money at it. If you want to be opened up for an audit, go ahead. Put those expenses there and report no income, and sooner or later, because remember, the IRS has 3 years to do it in, and if they suspect fraud, they can go back even further. If you have no income on your Schedule C for this year, you have no business. You have nothing. So, you see, the problem is you guys become greedy because you know in the past years that negative income that you've had, and by the way, a lot of you have had it repeatedly, year after year after year after year after year. At some point in time, the IRS is going to come in and they are going to say to you, you're not a business. You're not even focusing on business. You're not even creating business. You don't even have a business plan. You don't even have a business model. What are you doing? What kind of a business are you? Do you have the experience to run that business or to offer that service? All of these questions are going to come up because if they see zero income, a red flag goes up because you've reported a whole bunch of expenses against nothing. So quit asking that question, whether or not if you can take all those expenses the next year, because I'm telling you, Schedule C is a highly auditable form, and the IRS likes to pull it because there are a lot of people who put stuff on there that should not be on there. They make stuff up, and you've got to stop that because at some point in time, it's going to catch up on It's going to catch up on you, and then you're going to start yelling at your tax practitioner when you're the one that authorized to do it. Now, your tax practitioner should have told you not to do it. And listen, I've told these individuals who have written into me, texted me, I've said, no, you can't do it. And I'm going to stick to that because it's the ethical way of reporting your taxes. Don't be so greedy. Don't be so greedy. And then other people, which really amazes me, they have no W-2 income, so they have not put any money into the Internal Revenue Service or state. But they had Schedule C income, and they had 1099s, and they had expenses against that. And they still expect to have a refund from it. If you haven't put anything in, you're not going to get a refund. And if you don't qualify for any of the other credits, I'm sorry, that's it. It's done with. Zero is coming back to you. Now, in the past, you guys, honestly, you guys have had free reign almost on that Schedule C and also employee expenses. IRS did away with that employee expenses because it was abused. I'm telling you, it was abused. However, they gave you a benefit and they raised your standard deduction. And a lot of you were helped out through the course of the year by having greater taxes taken out, and then at the end of the year you have a higher standard deduction that has helped you. You have gotten your tax refund throughout the year because you've gotten more money into your pocket. Now, it may not seem that way, but it has. You have. And then when you go to file your tax return, a lot of you have a very high standard deduction that you're taking. because the IRS is giving it to you. In fact, it's higher than the amount that you were able to itemize in the past. So, come on, guys, if you're going to prepare your tax return, do it right, okay? Do it ethically. Because as sooner or later, though the IRS or the state will come after you, if you live in the state where they tax you, the IRS or the state will come after you because they're looking at your Schedule C, they're looking at the way you reported your income or no income, minus the expenses that you're taking, and they're going to put up a red flag and you're going to be pulled for audit. And by the way, they could go back the last 3 years. If they wanted to, they could audit you for 3 years. Open up 1 year, and then when they begin auditing you, open up another year and another year. So be very careful. Be conservative in the way that you prepare your tax returns and do it right. Be ethical about it. If you have to ask that question, if you can take those expenses, then you know in your heart that probably the answer is going to be no. Now, there are going to be some tax practitioners who are going to go and do it for you. They're going to go ahead and do it for you. If they do, you've opened yourself up to an audit. And I don't know if you've ever been in an audit, but it's no fun. It's no fun at all. So I'm going to request all of you guys out there, be proactive, do it right, so that you don't have to face the hammer of the audit. I mean, it's no fun. It's scary. A lot of you people automatically begin calling my office. By the way, I don't handle IRS audits anymore. I stopped that. But you have to be a good tax preparer. I mean, not a preparer, but a taxpayer. Do things right, because if you don't do things right, it catches up to you. And pretty soon you're moaning and groaning and crying and rolling on the floor and acting like a big old baby because now you have to face the tax man. No fun, guys. Do it right the first time. Do it right the first time. You know, taxes has changed. Ever since the Tax Reform Act, things have changed. And people still kind of haven't got, even though it's been 3 years now, people still have not gotten into that new way of thinking. And it's going to hurt you if you try to do it the old way, because there is no old way. Even if you try to put it in little boxes that you think is going to help you, it's not going to get you there. Taxes, that's why, I stopped doing taxes. Well, I still do a few taxes for really nice people that I like. But there comes a time where you have to say, I don't want to do it anymore because I've done it since 1984. That's a long time. In 1984, we were still doing it by hand. If you really want to know, we were still doing it by hand. And a lot of us were doing it by hand. And then a lot of individuals began to do computerized, and it became more automated, and it became much better way because there were checkpoints, people were checking our work and everything else. It was much better. It's much better now. But there are some things that you can miss along the way. And, after doing it for so many, many years, I said, you know what? Enough is enough. I'll do it for the people I like, but I'm not going to do it anymore for any other person because I'm just tired. I'm tired of having to deal with the IRS. I'm having to deal with the state. I'm having to, all the other stuff. I like what I do. I like to advise people on their taxes. I love doing that. I love advising people on their accounting and financial work and how to manage their HR and everything else. And I love doing my mediation work. I love mediating business problems between individuals or inside companies. But once you've done taxes, as long as I have done it, you get worn out. You get burnt out on it. And I think that once you start getting burnt out, that's the time where you should stop. Because you are going to make more and more mistakes because your mind just is not in doing something that you love to do. There's a lot of tax preparers out there. But the problem is that not many people want to go into tax preparation any longer. A lot of the old individuals with the new tax rules on tax preparers, they just left the business. And we've not been able to replace a lot of those individuals that left with new blood because no one really wants to take it. I went to a tax seminar last year in South Carolina, and I would say that the majority of the people, I would say 80% of the people in there, maybe even 90%, were past 60 years old. So you've got a lot of older people preparing tax returns, but they're slowly leaving because they've had enough of it. The young people that were there were just beginning. They were just starting out. And they've got to go for their continuing education if they want to practice before the Internal Revenue Service, or some of the states like California and New York, and I think there's another one that has very strict tax preparation rules. California is very strict on their tax preparer rules. And in fact, they're so well organized in California. This is one good thing I can say about California is that their tax preparer program is so good that the IRS recognizes it as a program that already has established a clear, defined legal process of preparing tax returns. And you don't have to go through all of the other IRS regulations except to do your CPE or continuing education courses. But California and New York are the two states that are recognized, and you don't have to, because right now, if you're not in one of those states, you have to, every year you have to go through the IRS program and get continuing education. But with California and New York, you don't have to do that. And the tax practitioner business has become not as needed as much as it used to because everybody can now do it online for much cheaper. Although I must say, I talked to someone the other day, they had their taxes prepared with, I think it was TurboTax. I'm not quite sure which company it was with, but the costs are over $134. Well, that's about the same as you would go to a tax practitioner. $135 all the way up to $500, depending on the size of your tax return. But let me tell you, that's about the average. So it hasn't become any cheaper, but it's become faster because they've got all of these things where you can get your refund almost immediately. So, anyways, to get back to my point, and that is that if you are trying to do something on your tax return that isn't quite ethical, and if you've got to ask the question whether or not if you can do it, you know yourself that you can't do it. So don't ask the question. Just think ethically and don't do it. Focus on what needs to happen and what needs to be done to make your tax return clean and presentable to the Internal Revenue Service so they don't have to pull your tax return for an audit. So that's my lecture for the day. Did you get it? I hope you did, because it's very important that you get it. Filing your tax return is a legal obligation that you've got to do. I know there are some left or right-wing groups out there that says, no, we don't have to file a tax return. That's not legal. Well, yes, it is legal. You have to file a tax return. You know, I don't even know if I like that Bible verse that says, given to Caesar the things of the Caesar, but to God the things of the God. You know, unfortunately, Caesar takes a lot. That Caesar, I tell you, he's up there with his little calculator and he's taking a lot. Unfortunately, our Caesar is in Washington, D.C., and we have several Caesars that are sitting there in Congress wanting more and more taxes. And then we've got the IRS who've got to interpret whatever the Congress passed, and then it comes out totally different from what we thought it was in Congress. So we have a tax mess. We have a tax mess. But under the Tax Reform Act, it did even things out. If you don't think it did, it really did. And one thing, it took off the table a lot of things that can be audited now. Employer business expense was always audited big time. If you had anything that you were deducting because your employer didn't reimburse you for it might have been continuing education, it might have been licensing, it might have been a whole bunch of different things. A lot of those things were ripe for audit. And thank God they took them and they put them away and they raised your standard deductions so it made it a lot fairer, a lot easier to file a tax return. Now, are they still taking too much taxes out? Yeah, I think so. I think they're taking way too much taxes out. Now, those of you who are considered millionaires, which we don't know what that classification is, it's going to get tougher if the Democrats want their way because they really do want to tax the rich. Now, remember, when Obama was president, he said the rich was the millionaires, the people in the millionaire category. Unfortunately, that millionaire category came down and affected all of us. So all of a sudden, we all became millionaires. But that's how it worked. What is said in Congress never gets interpreted legally until it gets over to the Internal Revenue Service. Then it changes. By the way, there's a transportation bill that's before Congress at the moment that they're considering. Now, in one of the transportation bills a long time ago, probably about 6 years ago now, they snuck in some tax language. And it was on international banks. So if you were an individual, let's say from the Philippines, and if you have a bank account that's $10,000 or more at any portion of the year, or even if you're a signer on that bank account, like for your mom or dad, and there might be $10,000 or more dollars sitting in there, you have to report that not only on your tax return, but you've got to report it to the Treasury Department. And if you don't report it to the Treasury Department, then it becomes a federal crime. Now, none of us saw it in there. We didn't see that bill going through why would it be going through the transportation bill? That's the problem. We've got all these bills out there, as you can see by the $1.9 trillion that they just passed. There's a whole bunch of stuff in there that we don't know. That is wasted money and also is going to affect us. Now, I haven't seen the tax, if there's any tax language in there, but I'm expecting that there is. That's why that bill should not be passed. It should be literally stripped out and only address the money that is needed to fight coronavirus and to help small businesses. This money that's being used for a bridge from Silicon Valley to San Francisco under Pelosi, that should not be in there. Schooling stuff should not be in there because if you read the language of the bill, that money for schools doesn't take effect for a year from now, 2 years from now. So it's ridiculous. So let's focus on the virus, getting people vaccinated, getting people cured if they have medical issues, and let's get people back to work. Let's get small businesses up and running again. But that bill has become filthy, dirty, corrupt, fraudulent, because it's not addressing the COVID issue at all. I don't know what percentage is affecting it, but because first somebody said it's only 1% and another person said 9%. Well, even those numbers are way too low. It should have been 100% for COVID. Everything that affects COVID should have been there. Not the school stuff, not the tunnel stuff, not any of that other, not the $15 minimum wage. None of that has to do with the COVID. So, what do? Well, we sit here and we think, gosh, what kind of politicians do we have who literally lie to the American people in trying to sell us a bill of nonsense that this is all for COVID? Well, it's not all for COVID. And we all know that. So if you don't agree with what Congress is doing, tell them. Tell them. Goodness gracious. I'm going to talk tomorrow about a a new bill that's before Congress that favors the unions in the United States and how it's going to do harm for independent contractors. That's for tomorrow. I hate to cover it, but I have to cover it because it affects businesses, especially you small businesses who are independent contractors who work for a whole bunch of different people throughout the year. Well, this new law is going to take the other way. Just like in California, how they did away with independent contractors. It's worthless. Listen, if you have any comments or questions, or if you want to tell me a joke, send me a text at 818-252-5682. Again, that's 818-252-5682. Or if you have a long one, send it to info@lodge-co.com. And we will sit down, we'll have a little chat. If you like my content, go to www.buymeacoffee.com/Michael Lodge. Any help is appreciated. So everybody, do your taxes ethically. Go out and face the day today. And I hope that you're able to say something good to somebody today or help somebody today. Because we all need a little pat on the back. Not on the bat, but on the back. And we all need a little bit of encouragement. This is Mike Lodge. I'll talk with you very, very soon. Bye-bye. This podcast is produced by Michael Lodge, fully focused on content.
All alone again tonight, but you don't seem to forget about yourself. Wondering how it could go so wrong, but you didn't call for help. But let me tell you about the trees and the seas, how it's all connected. Flowers and the birds and bees, the northern lights, yeah, we're all affected. Watching, pray, pray, pray. I'm breathing in. I'm breathing out.
Hi, this is Mike Lodge of The Michael Lodge Show. Join me on iHeartRadio and other podcast stations as we talk about wealth, business, and taxes. Oh, and some politics. Join me every day on the podcast that keeps focused on business.
So my friend, let me tell you once again, and you know that it's true. Forget about seeing it or hearing it in the